Hey guys, welcome back to another video. I hope you guys are having a great day. Natural gas market has been showing pretty much a consolidation period where we can see that the bulls are trying very strongly to try to push up the price and make sure it does not fall below to the next support level, which is close to $2. On the other end, US natural gas demand exceeds supply as LNG exports jump. Now this is some interesting information as this is the only positive news we have gotten in the past 7 days, which are towards the bulls. And also Russia might be coming in and shaking hands with China. Before we get into all of this, if you guys are here for the first time, you do want to stay up to date with everything to do with natural gas, scroll down, tap the red subscribe button. While you're there, slap a like on the video for the YouTube algorithm so everyone can stay up to date with what is happening with natural gas. Now this news that just dropped, I personally got a little surprised by it. Strong LNG exports have helped boost the US gas demand in 2022. US natural gas prices have dipped in the recent months due to warmer than usual winter weather. The EIA expects 2.4% less natural gas or US natural gas consumption in 2023. Yes, so does that mean the demand has gone up or has it gone down? Compared to 2022, 2023 is expected that it will require less gas compared to what it was required in the same period of 2022. Now, as a result, working natural gas stock in storage is 24% more than 5-year average and 36% more than the last year at this time. This is really concerning if you are trying to leverage trade and try to be a bull in the natural gas market, because you guys know US does not like to store natural gas as much as the EU, because EU knows that they can run into more problems as Russia is one of their biggest suppliers and they're pretty much in the problem right now. On the other end, seeing that also US on the other hand have been trying to store more natural gas shows that maybe the demand might be less at the end of 2023 when the winter actually rolls around. 24% more, that's close to 1/4 more than what was expected in the last 5-year average around this time, which is March. But compared to last year, it is up about 36%. On the other end, you know, Russia has been losing out on a lot of profit as they have cut down the lines for natural gas that they were providing to the EU. On the other end, they're gonna be shaking hands with China. Russia hopes to seal power of Siberian 2 deal with China this year. Moscow wants a quick deal to replace lost European cells, but Beijing is in the driver's seat on the prize. Wow. Simple duty. You need to understand, Russia is in need of money. They do not want to supply to EU because of the war and obviously a lot of problems they are facing with EU not allowing it to come in as well. Now Russia needs to find an alternate. The best alternate would be China because they are one of the largest users of natural gas as well, and seeing that they haven't purchased natural gas in the past 1 year or so, or in large sums, we're talking about the second level companies. That's why China is in need of natural gas. That would be the best time to shake hands, but the Russian people need the sale way stronger than China. So we're talking about Moscow wanting to sell this a lot more stronger than China wanting to buy. So what does that mean? That China will be setting the price in terms of what the price they want to buy the natural gas at. Now the contract terms are being finalized between them, the Chinese company CNPC. A study is already underway, the design of gas pipeline route through the territory of Mongolia, because that is the only country pretty much in the middle of China and Russia. On the other end, we talk about the price. As I mentioned, it is in a strong consolidation zone, but we're still seeing slight movement by the bulls trying to push up the market, but it's not significant that we can talk about it much. It's like close to 1%, which is quite nothing if you think about it. That's in about 7 hours. On the RSI line, this bull push has been trying to push the RSI line in the dead set middle as well. If that does go through, obviously it will be much harder to push up the price down the line. But if you look at the buy and the sell orders, they have significantly dipped, and the other reason for it is obviously the market is not open in a lot of places and a lot of people are sleeping. But once the market will be more in heat, do you guys think it will be breaking the barrier today on the super trend and putting us into an uptrend? I mean, we would just have to wait and see. Right now, it seems that it is just testing and trying to stay in the consolidation zone between 2.1 and 2.2. Now, domestic natural gas consumption is up by 6.7% in February. And we're talking about the international price helped boost the imports. Both gas and consumption and imports have risen for the second straight month in February, in a sign that was returning to the Indian gas market, where industries had cut consumption and switched to more affordable alternate fuel after the gas price rose to the record high. So obviously they're just trying to make profit of what is happening, and they're trying to make sure that they can go ahead and just make the most of it, as in February they have started using close to more than 7% more natural gas compared to January. The case against massive investment in natural gas, despite its being a fossil fuel, governments and energy companies continue to invest in natural gas, favoring it as a cleaner alternate to oil and coal. Experts fear that these massive investment in the new natural gas infrastructure are overestimating the future demand and increasing the potential of longevity of the fossil fuel. The International, or the IEA, revised its outlook for natural gas as gas growth prospects were lowered in the light of shift towards the alternative energy source. Now, this is a really interesting statement they're making. Obviously, this will not have significant impact on the price, but still, it's just really interesting to see. On the other end, natural gas features further decline, not favored in the near term. Right now, a lot of people want natural gas to fall under $2. The way the trend is setting, we're more likely going to be in a consolidation period above $2. It's not showing any signs of it actually breaking below that support level. And another thing that confirms it is further advances appear favored. Natural gas looks sidelined for the time being, as there is not many directional move that is coming, and as I mentioned, the news is significant, but at the same time it is not significant enough to actually shake up the whole market. Right now, I feel like the sideways momentum will carry for at least the next 1 week until we are able to see which direction the bulls or the bears are going to be pushing the market. The only thing I would say is, if you guys are heavy leverage trading right now, I would reckon sitting out of the market, wait for the market to make a decision in terms of what direction it will be taking, and then you guys can go with the flow. That's just my opinion. Again, it's your decision, it's financial advice, you need to make your own decision. Other than that, I hope you guys enjoyed today's video. If you did, drop a like on it. If you're new to the channel, subscribe. I hope you have a great day, and I'll see you soon. I'm out. Peace.